This is Paul Singh, the market speculator, with the trade report for Tuesday. Oil is getting crushed this morning, down almost 2.5%. S&P, after being up a little bit yesterday after the debates, are essentially flat right now. So not much going on there. And if we go back to yesterday, we got a hard kind of pullback here, almost 1% and 0.8%. Still within the key range we're looking at. So again, we went into this week market neutral. We're sticking with that and not really going to take any positions until we see some indications here. So the breakdown level is this range here. Again, we're basically reviewing because nothing really happened yesterday. So going back here 2 years, we have that range, which is the bottom of our current range here since that drop down day here on it was a Friday a couple of weeks ago. And then to the upside, again, we're watching for a move over the 50-day. And now that we've got below the 9, we're watching a move above the 9. So this is going to be a key level here. If we can remount that, we set ourselves up for filling this gap here and then the all-time highs. If we break down below here, we're setting ourselves up for some gap fills to the downside. So we don't really know which way this is going to go yet. It's actually looking a little negative here now that we've broke down below the 9. And this volume pattern here is not good. So we'll see how this plays out. Going into October here, let's review some current positions. Twilio here, there's two positions that are significant this morning. That's Twilio, which pulled back to 64, but still looks healthy after trying to make that push to 70. Now today, a little pop here up to about 66. And we'll see if we can continue there. But I'm not going to look to get out unless we break out over 70. AMBA pulling back a little bit here, still right around our entry and a ways away from our stop below the 50-day moving average. JNUG is the other significant position here as we're playing the bottom of this range here. We're set to open right around 1750, which is where our stop is. So I'm going to use the gap down strategy. We'll see how this holds this level. If it starts to continue to slide, I will get out pretty quickly out of JNUG. And then LABU here, pulling back, but still looks healthy and not near a stop level. And Fitbit, while it pulled back yesterday, still above the 200-day moving average. As long as it holds that level, it's healthy here. So basically managing my current positions right now until we get an indication from the market. I'm not going to take anything else. So this could be a slow week here. Again, that's part of being a good swing trader, is knowing when to push it, when to kind of hold back. And I think this is a good time to hold back. If we look at some of our focus list stocks we're watching, just about everything except for X pulled back yesterday. X continues to rise, as does do other steel stocks, but they're too extended for us to get into now. And these stocks that have pulled back here, we're basically waiting for where they pull back to and where they pivot and give us an indication of a good entry, either on the pivot or waiting for a break of the highs that they're putting in here. So that's essentially what we're doing with all of these. And then Twitter is another stock we're watching that continues to rise on takeover rumors, but tough to enter at this point here. So that's it for the trade report. Remember, patience is key here. Look for really strong signals.